Hi, this is Mitchell from CSOP Asset Management. As you're all aware, technology has been a huge theme in the last little while. And in particular in the West, we've seen small companies grow into absolute tech giants in this day and age. We've seen companies like Facebook, Amazon, Apple, Netflix, and Google grow from companies that could have been started in a garage to absolute day-to-day essential companies that we use on a daily basis right now. And in the East and China, in the last few decades, we've seen their tech companies quickly catch up to their Western peers. And for this reason, as of August of last year, we released the 3033 ETF. This tracks the HS Tech Index, which is the 30 largest technology companies by market capitalization that are listed on the Hong Kong Stock Exchange. These are companies that are primarily derived of so-called soft technology. And these companies will be household names such as Meituan, Tencent, Alibaba, all names that you would have heard of. However, as these companies are specializing in soft technology, most of the technology that are involved would be mostly software, social media, and applications based. But what about something that's almost equally as essential, such as hard technology? Well, with that, we're pleased to announce to you that as of February of this year, we released the 3109 ETF. The 3109 ETF tracks the STAR 50 index, which is listed on the STAR board of the Shanghai Stock Exchange. The STAR board aims to promote small technology companies that are yet to turn a profit, but without a doubt allocate a large amount of capital into R&D and hence have a high growth potential. And in particular for the STAR 50 index, these are companies that are 30% focused on semiconductors and 70% focused on information technology. And so this goes to show the high-tech focused nature of the STAR 50 index. It is believed that the STAR 50 index is supported by two major structural factors. Namely, right now in this day and age, countries are using technology as a national strategy to surpass each other. Each country are racing to develop the latest technology and to be the quickest to do so. Furthermore, in the recent 14th five-year plan released by the Chinese government, technology, domestic demand, and digitalization are the main focuses of their policies in the next 5 years. This goes to show the STAR 50 index would be heavily supported by technologically favored policies, and in particular with the STAR 50 index being more innovative, small companies with high growth potentials, we can almost foresee that these policies will heavily favor and place these companies in the backbone of China's economic transition into domestic demand. Prior focuses from the central government were more so on agriculture and export driven. But now with these tech companies being in focus, the central government will use them as facilitating tools to further accelerate and quickly catch up to their Western peers through being domestically reliant. The STAR 50 index in the last year and a half recorded roughly about 222% returns. And in particular, 33 out of the 50 constituents recorded triple-digit returns. This once again highlights the high growth potential and the venture capital-like features of the underlying constituents. In terms of accessibility, 3109 provides investors with a complete access to the STAR 50 index. Prior to 3109, investors were only able to buy into 9 out of the 50 constituents through the Stock Connect. But now, with 3109 listed on the Hong Kong Stock Exchange, investors are able to fully buy into the 50 underlying constituents of the STAR 50. And we hope that the STAR 50 index and 3109 will be able to provide investors with a very niche and further diversify their portfolios into companies that they were not able to invest in prior to the release of the ETF. We hope that you enjoyed this video, and if you found it informative, please do take the time out to like our YouTube and Facebook channels. Hope to see you again, and thank you very much for your time.